Hi, and welcome back to our weekly episode where we discuss what happened in the week that has transpired, what big economic information came out, as well as what we're looking for next week. Last week, Urs, we had mentioned a few things that we were looking forward to. I think what's going to be really interesting is the total household debt that came out of the United States. Yep. But before we get to that, let's cover what happened in Australia with their interest rate decision.
Yeah, I mean, as we already anticipated, it's not that exciting. It stayed at 4.35%, and inflation is still up. But what is really interesting is that the statement of the central bankers was rather hawkish, that they said, okay, maybe it needs one or two other increases in interest rates. Even so, the investors didn't really believe them. And that's interesting how it also there starts to shift, shifts away from each other.
Yeah.
So that, yeah, I mean, central bankers say one thing, investors think they know it better, but we will see how it turns out.
Yeah, and we can see if investors can fight the Australian Royal Bank as compared to, or the Royal Bank of Australia, sorry,
Yes.
Compared to fighting the Fed, which we know is a challenging thing to do.
Definitely.
We also looked at some of the numbers coming out in terms of the services PMI.
Yeah.
What did we see there? Was there anything interesting or kind of surprising that we saw?
So you have the index, which went up from 49
Correct.
to 53.4.
Yep.
And so how it works is if the level is above 50, it means that the sector, the service industry is expanding. If it is below 50, it is contracting. And interesting is as well that the number for December previously was 50.5, and then it was revised to 49. And so we will see what it means this time, whether it will stay for this 53.4%, not percent, but points. And so, I mean, in general, it is a positive sign. It shows some strengths in the industry, but it also shows some risks towards inflation again, that if the service sector is strong and getting stronger, that there will also be more price increases, which can be hand over to the end clients, which could also have eventually an impact on inflation again.
Yeah, and I think that was also interesting because they had also mentioned another risk that they were worried about was potential interest rate changes, what that would do, and also geopolitical conflicts that exist, obviously, that could add some inflationary prices if things change significantly.
Yes.
So that was definitely interesting. We also talked about initial jobless claims in the US. That was quite interesting to see. Maybe you could shed some light on the numbers themselves.
Yeah, so the numbers published were quite a bit lower than what was anticipated from experts, and again, it shows a very strong employment environment. But as we have criticized in the past already, the question really is, okay, what is behind it? How strong is it really? How many people were going to or did claim jobless benefits, and how many were waiting or will be let go in the foreseeable future? Because what we also talked in the past or in the last episodes was that there are a lot of companies bringing out or announcing their figures, and sometimes they are suffering of profit margins coming back, and so they have to go against that and save costs. And the easiest way to do is to cut on salary.
Yeah, and I think also what's interesting is we saw it's decreased obviously from what it was looking like in January, but the trend in January there was quite a few more layoffs, and so maybe February a lot of those layoffs have taken place, and companies were then restructuring and looking at their books as, will we have to do this again come mid-year, and seeing how Q1 and Q2 go, and then what does it look like for the second half of the year.
Yes, correct.
So another thing that was interesting, again, as it was mentioned, was the total household debt in the U.S. And I think there were some really interesting numbers there. So could you give just an overview quickly of what we saw in those numbers that were released?
I mean, it was a further increase in total household debt. It's, I guess, no, I don't guess, but it's around 17.5 trillion.
Correct, yeah.
So that's a huge number. And also what is especially worrying for us, or from our perspective, is credit card debt, which has accelerated further to about 1.2 trillion. And also like mortgage debt went up, and auto loans and so on. So yes, this is worrying. And then on top of that, we have more and more failures in meeting the obligations to pay interest, to pay back debt. And so that goes into a direction which is worrying from our perspective, but for some reason doesn't seem to be worrying for a lot of other experts at this point yet.
Yeah, I think that's, for me, what's concerning in general. When we look at the US from just on the government standpoint, there's a huge amount of debt. We saw their credit rating dropped because of it, because of the instability of the political or the polarization, as well as this incredibly mass amount of debt that the government holds. But in these numbers, we see that the population holds also a lot of personal debt. And that credit card debt is something that can be really challenging, that we've seen really spike up since all of the government stipends have run out. And that for me is certainly concerning. We also saw last week numbers coming out of Germany, I believe it was, the inflation figures. What did we see? Was there any positive news there?
I mean, it was positive that it dropped below 3%, so it came to 2.9%, which is encouraging to some extent. But I mean, we also saw when the ECB, the European Central Bank, made their decisions on interest rate and kept it at the level where it was, that they are not convinced yet that inflation will stay as low as it was. And as we also have seen in the past, is of subsidiaries going on or subsidizing, and even more so in Germany. And so that stopped recently and might have a further increase or impact on inflation, that it will regain again. Also from the service sector, I mean, if there is more pressure coming, that would be interesting how much of an impact it will have on inflation figures.
Yeah, and while it is good news that Germany's finally headed in the right direction, and they have been over time, but for an economy that's really taken a beating last year, I mean, for me, it was a little bit of a wipe of the brow for a moment. But I think as long as the ECB stays strong, they can keep going in the right direction.
So Switzerland, I mean, we are still very good there. We are at 2.4%, 2.3%.
2.3.
And on an annualized basis at 2%. I mean, it's almost as low as it wasn't for the last 22 years. The last time it was lower was 2001. So really encouraging. And Canada is around
5.8%, I think, is what
5.8%. Yeah, correct.
It's an interesting figure, much higher. I mean, a bigger population than Switzerland, but a bit higher in terms of keeping it at a healthy level, although 5.8% is not out of control, but it's good that it at least stayed stable for their economy.
And I mean, then we can go right away to the inflation figures in China, which is not really inflation we're talking about, it's deflation. So it's negative 0.8. That's going this way for more than four months now. So they are struggling a lot, and they are still in their real estate crisis. They have business real estate, which is struggling a lot, and which also or starts to show up in other countries, in other economies. We also have seen it in America, more so recently with the struggles of the New York Community Bank Corp. They announced their numbers and said they cannot pay any dividends for the time being because they have to generate enough liquidity to ensure payments or losses in mortgage debt when business real estate debt holders cannot pay anymore. And we also see like more objects, more real estate coming on the market in other areas, as for example in England.
Yeah, it'll be interesting to see when some of these properties or numbers come out and what they're selling for, what that picture looks like. I mean, you know, there's been talk in the US about this big corporate real estate scare, or guess what's happening, because there's a lot of corporate real estate bought up and it's not generating any kind of cash flow. It's sitting empty.
I mean, it's even that bad that Janet Yellen has to come out once again and trying to calm down the people and say, okay, we have everything under control, but she couldn't say everything is fine. She even said it is worrying what we are seeing, but we will take care of it. So we will see where it leads to, but it's still possible and likely that there will be some companies going bankrupt, some debt which will not be paid back. And we also see in general that filings for Chapter 11, for example, have highly accelerated in the US and also in other economies. And so it's really interesting to see these different numbers from unemployment, which is very encouraging, inflation coming down, and then on the other side you have issues where like people, individuals, and companies just stop to pay interest on their debt. And this would honestly also be one point which would support the perspective of seeing central banks easing interest rates at some point. If things start to break, central banks usually start to take measurements or measures by reducing interest rates.
Yeah. Great, thank you for that.
Yeah.
Looking forward, what are we looking at for next week?
From our perspective, what will be very interesting is CPI Consumer Price Index numbers coming out in the US and in Switzerland, and also a Producer Price Index, which is kind of similar what the Consumer Price Index shows, but it is more from a producer perspective, like raw materials, how they increase in prices and so on, because not all of the costs can be handed over to the end consumers. So this will be interesting. And then we have the consumer sentiment in Switzerland, which we obviously as Swiss people find very interesting to see how it looks like. I look forward to see everyone next week.